Morning, Steve here in Chicago with the morning grain comments. Over the weekend, we did see some rain in U.S. southern plains. The western part missed out on the good rains. Oklahoma, eastern Kansas got the best rains. So in general, people thought that the rains were a little disappointing and that they're going to need more rains down the road down there to have normal crops. Kansas City wheat's up about 4 cents. Wheat market is still finding pretty strong overhead resistance at the fact outside the United States, at least the southern plains, wheat crops conditions for 2018 look pretty good, especially in Russia. We also note that we're going to see some warmer and drier weather across the Midwest and northern plains, and that'll allow for some planting, and that should keep a lid on Minneapolis wheat and also on corn prices. In the beans, we heard that China's been an active buyer June, July of Brazil beans. So again, this uncertainty of trade issues is probably forcing the Chinese crushers to look at Brazil as the first option, U.S. maybe the second option, which could offer some resistance to the soybean market. But still, it looks like the funds want to be long beans and meal. It's hard for the market to break under those conditions, despite the fact that most of the news in the bean market is negative. We've seen that right now the dollar's a little bit higher, and crude's a little bit lower. Crude's had a pretty good run, and with the 10-year notes approaching 3%, some people were saying this might be the sign for the first time in quite a while that we have a little bit of inflation in the marketplace. The key, though, for grains is still weather and crop conditions and supply and demand fundamentals more than funds coming in and buying the market because of a concern about inflation. We did note that open interest continues to decline as we approach the first notice day in the May contracts. Open interest still remains relatively high in the May contracts. Overall, open interest continues to decline. So maybe some of last week's losses might have been due to liquidation in front of the May options and liquidation in front of the first notice day of the May contracts more than anything else. For the most part, everybody's looking for 17 and 18 bean carryout to be a little bit lower than USDA's 550. The corn carryout maybe a little bit higher, and the wheat carryout unchanged to maybe a little bit higher. For 18 and 19, looking for maybe a big range in the bean carryout, depending upon where you put the crop. It's anywhere from 365 up to 540. USDA and their outlook conference was 433. Most people are looking for corn carryout lower than this year, mostly in the 1650, 1675 area, due to a lower crop. And the wheat carryout about unchanged from this year. So in general, we might be in kind of a sideways trading range until we know more about the U.S. and Northern Hemisphere crops this year. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.